Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Thick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Monday morning edition of Benzinga's Pre-Market Prep. I'm Spencer Israel, as always, joined by Joel Elconin and Dennis Thick. Joel is back from his adventures in Chicago, so we'll ask him about that, what that was like last week. But we also have a lot to get to in the markets. Big news of the day is, of course, this Northrop Grumman deal. They are making one of their biggest deals they've made in quite a while. We're going to talk about that. NOC buying OA. We've got some movers. We're going to take your questions in the chat. We're going to talk about the Fed meeting this week. We get to talk about gold, everything. Our guest today will be at 8:35. Nate Tobik is the guest. He is an investor and founder of CompleteBankData.com. He's maybe one of our best bank analysts that we have. So Nate Tobik on talk on the financial sector today at 8:35. Joel, what's doing in the markets?
S&P futures are trading in the green here by 4 points. Nice little lift overnight over that psychological $2,500 level, 2504.50. That's your pre-market high. That could be a target on the upside. Pre-market low just above the close at 97.25. Let's take a look at the crude oil market, getting over 50 while I was gone. Let's see if this could be a sustained move. We hit 50.85 in after pre-market trading. Let's see, could this be a pattern, a long-term pattern between 45 and 50 being broken here in the crude oil market? We can look at a weekly and see how long this consolidation has been going on. And gold and silver just hanging out, no big moves. You have gold on the lows here at 13.16.30. 2 days ago, we're over 2 weeks ago, over 13.60. Dennis, how you doing today?
Not too bad. Looking at another market rally. Just Groundhog Day around here, Joel. We just rally no matter what. There was no nuclear war on the weekend, so that's why we're up.
No nuclear war. We had a little fireworks on Thursday night, right? We
did.
Yeah.
That was short-lived. By the time Friday morning it opened, we were almost up to scratch. And then obviously we had, an option expiration. And then that drove us up to new all-time highs again. They just look here and it's just, you can say, okay, well, the SPY wasn't all-time highs, but the SPY went ex-dividend, so it really was when you adjust it for the dividends. So S&P futures all-time highs. S&P futures all-time highs here again this morning. BTFD forever, Joel. It's like this. It was just what we've been saying. Just keeps going up.
And
can't stop it.
And we had a little bump. It was after the close, right? And between that 4 and 5 o'clock hour, I noticed the SPOOs went off the board at 97.25, but they got that thing printing 2,500 in the after hours, and really never looked back.
Gotta buy it.
Gotta buy it. Morning after hours. All right. Well, we had
you gotta just buy, isn't that what it is? Every time it pulls back 1/4% or a half. That's the new correction now. When you get 1%, that's like a crash. So when you get like 1/4% or a 0.5%, that's the correction. The 1% is the serious like bear market, and then 2% I guess would be a crash. Is that the new ratios, guys?
I don't,
because that's what we see here. When the market goes down like 1% now, you see CNBC flashing markets, in turmoil. That's down 1% from the highs.
Well,
these markets haven't been in turmoil in 8 years.
Well, we've already determined a down day is unchanged, right? Like when we don't actually go up and it's unchanged on the day, we can consider that a down.
That's
day.
A horrible day when it doesn't go up.
All right, so I heard you made a good call on Friday and in NVDA, and I certainly hope you capitalized on it.
Somewhat. So me, and I make a lot of calls on the show there, but I said on the show in video, I love this chart, but we had a catalyst. So we had the catalyst there, and that's what sometimes you need. So sometimes it's just not good enough to have a nice setup or a nice chart, because the NVIDIA chart had really looked good for a few days. What we had happen on Friday is we finally had a catalyst. We had an analyst come out with a bullish call, couple that with as bullish of a chart as you see, then you get the bump up, and then you got the breakout. and the breakout, and then never looked back. NVIDIA opened up right near the lows. If we look at where it opened at, 172.86. Low of the day was 172.65. So if you're buying that open, you took almost no heat. Stock closed on its high of the day, 180.11. We love them when they do that. And here we are this morning. It's continuing here again. So now you'd be up 11, 12 points. I think, Lauren there, she's listening to the show there. Congratulations. I know she bought some stock. Hopefully some other people got a chance of it too. I actually bought some AMD along with it because I said on the show, if NVIDIA goes, AMD probably goes along for the ride. So I played AMD off the hop, and then I actually played AMD overnight here again too. Made some money on that as well. So, so I am benefiting indirectly from NVIDIA because AMD follows suit. But, it's a big move. It's a breakout. We had a catalyst on a nice chart, and that's the combo you like to see.
Yeah, we were talking about how you can have the nicest chart pattern in the world, but unless you have some kind of catalyst or some kind of macro news, moving into the stock,
sometimes
you really,
not good enough.
Yep. You really got to wait for it. Let's just go back to the NVIDIA chart. We hit 184.88 in the pre-market trading, backed off there. So 184.88, 185 could be a target on the upside. We are also talking A&D though. Kind of been a laggard of late, Dennis. And what do you attribute that to?
I don't know. Maybe it's just some separation. Maybe, it had a broken chart, so it didn't have, like the momentum. You get a lot of people, they would argue NVIDIA is still hardly, it's very much an uptrend. I would argue that as well. When you look at AMD from a technical perspective, that trend is kind of in jeopardy. I mean, if you go long term, you can still see a trend, but it's just been hanging out so long, it kind of broke the short-term upper trend. A lot of people look at the moving averages there. So it's just kind of been, a little bit out of favor here. But I think if you got NVIDIA, it's going to be popping. It's going to drag AMD along with it. That's why I've been playing AMD a little more from the long side. And you got to still hard support down there on AMD at $12. I mean, it takes out all those lows, multiple lows, 1188, 1186. 1193. You can see all the lows. I'm looking at 1203 just right there. A couple days ago. I mean, there's multiple. It's a hard support level. So if you're buying here at 1270, your out's around 1180. So you're risking a little under $1. But and obviously if you're buying on Friday or Thursday, you're risking even less than that. I don't know. I think if NVIDIA could go to 200, which is what I said on the show on Friday, I said, when in stock was at 172, I said I think this could see $200. And obviously it's halfway there in one day. I don't know if I saw it blasting off that much on Friday, but with today's 184, we're only 16 points away from there now. I think NVIDIA sees $200. I'm sticking with that target.
Has Mr. Left been out with any short calls on NVIDIA lately?
How's he doing in that? You know what? Mr. Left, I think, covers, though. He's a trader. He's not like Warren that's going long term, where he's not like Ackman. Mr. Left comes out, puts on a trade, tells the world about it. It usually comes back in because Mr. Left's short. And I think sometimes Mr. Left covers into that. But, it's hard to say. We can't follow along all of his positions there. But I wouldn't be surprised if he's out.
Colin picked up a few NVIDIA calls. Hopefully, I must have been on Friday, and probably on that Friday on that weekly expiration, you probably got a nice bang for your bucks. Colin, let us know what strike you looked at, because you can imagine if that thing opened up at 170. I mean, yeah, it looked good and it was going to move up, but 175 calls, I wouldn't wonder if they would have been priced at. You're thinking, how are those going to go in the money? And that's one thing, Dennis, you've talked about, trading options and longer term, the premiums, but man, you can get a bang for your buck on a Friday of a weekly expiration.
That's the one time. And through my, now I'm 18-year career, I've done a lot of options trading, and I don't focus on it as much as I used to. I don't know why. I think I just like the equities more. But, I've dabbled in options a lot. And I'll tell you, the weeklies pretty much, are usually a loser game. It's hard to make money on those. But on the actual day of expiration, the premiums are a lot cheaper. They're trading off mostly intrinsic value. So sometimes even with an hour to go, like a stock might be at 174, let's just say, and it wasn't in this case. I'm just using it as a hypothetical example, but where we could use a real example. I mean, NVIDIA, wow, it really had its move early, but sometimes, you can get something with an hour to go in. And and obviously I talked about sometimes you can even exercise them after hours too. But I love trading the stock against my options. So sometimes you'll buy something a little bit out of the money, and then it'll get in the money, and people want to sell the option right away. A better way to play it is sometimes to sell the shorts, the stock short against your call. And then you're still participating because you've locked in the profit. If it goes off the board, the call will exercise, the short will go, and you'll be scratch. You'll be flat in the trade. But if it comes back down through that strike price, well, then you can just cover in the stock, and now you still got your calls. So I know there's been some option expiration days, where I've picked up, a cheap weekly, and I've played the stock against it. And I've, let's just say, for example, I've got stock XYZ. I've got the 50 calls. Stock goes up to 50.25. I short the stock. Comes back down to 49.90. I rebuy the stock. Goes back up to 50.15. I short the stock again. Comes back down to 49.85. I buy the stock again. And that's the natural pin action that the market makers are doing too. Like, people always think it's a conspiracy that stocks pin. It's natural. It's natural trader tendency, because the professionals, the people who actually, have the big money, that have the money to be able to do that strategy, because that's the one downside. I mean, if you got a retail account with 10 grand, you can't be, using Amazon calls. You won't have the cash in your account to be able to go out there and actually buy the stock or sell the stock against your calls. But, if you're sitting there trading corporate money or like market makers are, and you got access to millions of dollars, you can. And there's, a huge strategy in just trading the stock against your options there, because sometimes you can play it multiple times as it's hanging around one of those major strike prices. And that's what causes the stock to pin. The natural market makers selling the stock, if they've got the calls, they'll be selling the stock above their strike, when it gets above there, selling it short, and then buying it back when it pulls back, below that price. So that naturally pushes it always towards where the strike is.
All right, we got some news here on NBRV. It's flying. I see it just hit 1493. I don't know what happened on Friday, but this thing was blown out of the water. Spencer, what do you have on Nabriva Therapeutics AD-sponsored ADR?
Announced a phase 3 trial, met all primary FDA and EMA endpoints.
I was going to guess that endpoint. I'd be really going out there on a limb too.
And what happened on Friday? They hated this stock on Friday. It fell out of bed. Was it just some nervous Nellies ahead of that actual news? Because here's an opposite trade where the stock go Friday.
Nobody had that info, Joel.
No one. You can't include.
They had it wrong. If they got the tip on that, they got it wrong.
Well, if you want a stock that Dennis and I probably won't trade, it is an ADR that is a drug company or a biotech. So
probably a one-trick pony.
14.93. We backed off to the $14 area. So early reaction is 14.93. Let's go to, oh boy, this hasn't been up here. Oh, look at that. On a weekly here, you find a high back in September of 2015. Wow, 2 years ago, you hit 14.83. You just hit the upper 14 handle. That's a good target for me if I have this thing. All-time high, 17.48. Dennis, did your scanner catch that, or that's what Fuzzy's asking? Is anybody catching?
Well, it depends when he's asking it, but I've got the up scanner and the down scanner there showing me every stock. So yeah, it's right on my leaderboard there on NBRV. So if I can go to my leaderboard right now here, I can tell you what else is on there too. Actually, I can't because I forgot I had to reboot this computer. I didn't restart my program here yet, so I can restart that though. But I obviously am a big fan of scanners, Fuzzy. So I've got 3 separate software that scans for stocks. One is scanning for stocks that is just bid up and offered down. They don't even have to trade. If there's a bid that goes above, where a certain percentage point that I have it set at, it'll show it to me. One is showing me actual trades. So when a stock trades, from anywhere from like 0.5% up from where the previous tick was, or from where it was trading in the previous minute, it'll show me that. So that would be a big mover scanner. And then I have stocks, and then I just have the regular scanners just showing me everything that's up the most and down the most, and just ranks them. So it's the scanners I've used my entire 17-year career. I think that's one of the most underused tool for every trader out there is using the scanners to find where the trading ideas are. Like, I'd be lost without my scanners, because I'm scanning, it's giving me all the ideas, and it's not saying necessarily to buy or sell, but it's telling me where the action is. And then, I go and trade where the action is. And I love trading the action, not necessarily always into the leader, but, there's always laggards in the sectors too. It's difficult with pharma stocks, but, when I see a big stock moving all of a sudden, a big bank takes off, or even a little bank takes off, a regional or something, it might move the other regionals up with it. So there's always, ideas that can be generated from scanners. And I think, if you've got, a good scanner there, it can help you in your trading significantly.
All right, so let's.
They're asking which scanners I use. Okay, so I have NeoVest, I use the NeoVest scanners, and this is just a free promo for NeoVest there. I also have MadScan. Max at MadScan is awesome. And then I have my Interactive Brokers just a scanner. And then I have some proprietary scanner too. I actually had, here's a story for you. So back in 2004, this is when I first got into automated trading. I remember just saying, okay, so I went out and, looked at, what it was going to cost to get, some automated software built. And it was crazy amount of money. Well, I had a friend, and, this was earlier in my trading career, so I didn't have a lot of money to, go throw $200,000-$400,000 at building, some scanners and stuff. So I had a friend who his younger brother was in this course at the University of Windsor, and he was in a programming course, and they were taking pitches for trading ideas. So, or not for trading, for software ideas, like, to do like database or different things for the kids to program. So I ended up throwing a pitch out there for automated trading software. Teacher loved it and accepted it right away. And I worked with 4 kids for free for a full year, 4 fourth-year programmers for free for a full year. And they helped me to build my own proprietary trading software, automated. So, and I used that automated software for a lot of years. I used it 2005, 2006, 2007, 2008, 2009, 2010. I actually had 2 separate accounts. I had one that was trading just pretty much just automated, like almost full high frequency stuff. And then I had another one that was trading manually. So my automated account would make money almost every day. And in 2010, things kind of changed. 2009, 2010, the markets, I started, noticing that my automated software just wasn't, consistent anymore. And by really 2010, 2011, wasn't making any money at all. And it's funny how, everybody today, here we are in 2017, will tell you, oh, you got to be automated in this market to make money. I'll tell them the exact opposite, because I think there's huge money and potential for manual traders in there, because everybody tries to be automated now, and they're all competing against, imagine, how you're competing now. Here, I was in 2004, 2005, way ahead of the curve running automated software. And doing very well with it. But high frequency trading came in, and pretty much any free money that's out there, and that's what my system would do, it would just pick off free money. So if it was offered on one exchange, a stock, and offered on a different exchange at a different price, it would just do the trade. Or there was I had different ideas too. Like there was multiple, things that the software could do. I actually had a custom, where I'd, rewrite and do some different things myself. I could program a little bit myself. But everything, the high frequency traders came in and they've picked off all free money. So it just doesn't exist for you anymore. We know the high frequency traders, are like they're going to be the fastest. And only one, person can win the race. You're not going to compete with them on speed. You could spend millions of dollars on the best trading software in the world. If you're trying to compete with the top dogs, you probably don't stand a chance. But because those top dogs have pushed out so many human traders, you can look at the floor for the best example of this. It, Joel, back, in the 90s, the floor was littered with locals and scalpers and traders, just doing everything manually. Now you look at the floor and there's tumbleweeds down there because the computers pushed them all out of the space. So what that means for you as, a retail trader or a human trader is that you have a lot less human competition. Your competition out there is a bunch of machines that are all programmed to do the same thing, pick off free money. So if you employ just a little bit of risk, because they don't like risk, like I've said, high frequency traders' profit margins are fractions of a cent. They're not coming in here and trading, stocks that are around $3, $4, $5. They're just out on that because there's too much risk in there. So, and there is some machines and some programs that are going to trade those type of stuff, but the majority of them aren't going to trade that type of stuff. That's why at the open, there's a lot less liquidity there too, because there's risk. But if you could come in there and just employ that little bit of risk, now all of a sudden make a call, or, or make, a statistical edge, something you've quantified. And we do a lot of that on the show, talk about little, quantifiable edges there that we talk about. Giving a little bit of risk allows you as a human trader to have, that edge over the machine. So and now I would say I do much less automation here in 2017 than I did in 2006 and 2005. So where everybody argues that you've got to be automated to be successful in this market, I think they're late to the party. I think you're over 10 years late to the party. I don't think you need to be automated more. I think it's went full circle. I think the human trader has a significant edge, more of an edge than they did 10 years ago.
And you can definitely gauge the overreactions in the market. Just speaking about high frequency trading, I met a trader in Chicago last week. There was a flash boy. And man, I spent a lot of time with him talking about the markets, and we are going to get him on as a guest to talk about
from RBC.
Yeah, yep.
Nice.
He knows Brad and the whole crew, and he had some
Brad's
pretty.
a great guy.
Yeah.
The IEX guys are great. I love the IEX guys. So I know Brad too. And and John Schwall over there. They're all good. They're all good guys, the IEX guys. I know a lot of your professional market structure people that don't like IEX and they're trash IEX all over the place. But the IEX intentions are all in the right place. I mean, they are trying, to level the playing field as best they can. And it's an uphill battle. They're coming, they're little industry disruptors there, and the industry itself doesn't like that. But the IEX guys, their heart is all in the right place. And I love all those guys. Those guys are great.
Okay. All right. So S&P's up 4.5, 2501, 75, trying to get our first close over 2,500, 107. Pretty good volume in pre-market trading. So what else do we have for market movers?
Well, we usually do the ratings a little bit later, but I want to do them now because there's a couple big ones here that I want to talk about. Caterpillar is the biggest of them all here this morning. It is getting upgraded to UBS to a buy.
Wow.
You got price target on that, Spencer? Because this is a big call here from UBS.
On Caterpillar, let me look.
Yeah.
I didn't see one when I looked the first time. Let me look again. No, I don't.
140, mate. 140. I saw it go by, I think. I just checking the same time you were. So it looks like they're upgrading to buy, putting a 140 price target on the stock. This stock was right kissing, all-time highs here on Friday. Actually did. It made an all-time high on Friday there. The cat is back, and cat is hot here, Joel. Up $1.83 here this morning. Thoughts, concerns? What are your thoughts?
No concerns if you're long. I'm just saying you got a print up here at 123.44, so a nice $2 gap. If I'm not mistaken, there might have been some positive ink and barons on this one too, but don't quote me on that. So nice move up. Less than 8,000 shares have traded so far, so it takes a little bit more than that to move it in the regular session. But just hanging right here near the pre-market high, 123.44, using your half and whole numbers as potential exit points. It's probably too far away in the book to.
I'm just trying. I knew you were going to ask it to me. So, like I said, I hadn't logged into my one system, so that's what I'm doing in the background here right now. I'm actually logging into my other system to go grab the book here for Caterpillar. But I bet there's some stuff in there maybe. So I'm going to go take a look here right now. What about Deere? Deere has been a sleeper here for a while. It had the report that wasn't that bad, but they trashed the stock on it. But it's been kind of coming back here. We're trying to get into a gap area here, Joel. Do you think there's a potential here for, a Deere sympathy move here with Cat? What are your thoughts?
I'd be buying Deere instead of Cat here. I mean, just for a potential gap fill. I mean, how many times do you see earnings and have these kind of reactions? And what's double interesting about this Deere chart is you had a gap off one report in May, and then you ran up to that 132.5, and then you came back down, and boy, I want to see how close to see. You had a high of 113.52. Oh, look at that gap fill, Dennis. You got into that gap very nicely. You had a low at 112.87. So 76 gap here. It was filled. Now back up, busting out. I mean, what is there, Dennis? What can you tell me is in there until the bottom of the gap at 123.60?
There's an opportunity here in Deere, especially if it gets above 120, just because 120 is a big whole psychological number. The book is kind of got some stuff in there, and I can see a 15,122, but then it's already filled up, and I can't see the rest of it. I will tell you, Deere though has 26,000 sitting, on the offer. That's this New York book at 120. So that's the bogey. It needs to get above 120, then it opens up, from an order flow perspective. So if it can get above 120, then there's room in Deere. But I'll tell you one thing, and I through my history, I've always given gun shy buying stocks at all-time highs. But in this market, when you're buying stock that all of a sudden breaks out on an all-time high, like in the NVDA there on Friday, the Caterpillar, those things getting run, man, because there's nothing up there. And Chris Banier, he listens to the show every once in a while. I learned a lot from Chris back in the day too. Just an excellent trader. I traded with him for 7 years at Bright, and he's always one. That's what he does. He just buys stocks that are making new all-time highs, and he does very well with it because he's like, there's no pain up there. There's nobody that's ever been, down in the trade. So you don't have any overhead supply because nobody's down in the stock. And then you have the only people who are down the stock are shorts. And they could come in and potentially cover. So he literally makes his living buying stocks at all-time highs. And that's very counterintuitive to most of the traders out there, because everybody wants to buy the stocks on the cheap. Even me, I'm a little bit of a value guy. I like to buy stocks on the cheap. I tell you, he does very well buying stocks at all-time highs. It'd probably be on Caterpillar today. That's what he does. And, and sometimes it just goes. I'm sure he was on NVDA on Friday. He's all over that kind of stuff. And he often does it with options too. Like, he gets himself levered up, and so he can make some pretty good money on those stocks when they make big moves after they're breaking out to new all-time highs.
Yeah, that's my problem. Like, I'm given potential resistance points in Caterpillar here, and the only thing you have is the pre-market high. But we'll see if Deere can catch a bid with that one. I always bring up Ingersoll Rand, and Dennis always says, "Oh, that's not as closely related." And then one time we brought in Case, right? CSE. That used to be. What was the old symbol for Case? CH.
Oh, you're dating yourself here now, Joel.
Someone help me out on that one. But
I don't know. You're dating yourself on this one.
I always do that.
In any regard here, sympathy, I will tell you still, this market, sympathy has not worked as well as it does, sometimes. Sympathy it will work at certain times. It will work, and we often talk about it, but it takes a big move and a leader to really get some good sympathy moves here as of late. So anyways, but we do have a merger here too, Joel, we didn't talk about yet this morning in the aerospace sector. I'm not sure if that's going to kickstart some of the other aerospace stocks here, but Spencer, what do we have?
We have NOC, Northrop Grumman, buying Orbital. ATKOA is the ticker there for $9.2 billion. That is, $9.2 billion. It's $7.8 billion in cash, plus the assumption of $1.4 billion in net debt.
ATK trading up 20% here. So this is a cash deal?
Yes, it is.
Not
yes,
ATK,
it is.
OA,
It's NOC buying OA.
Okay. So at 132, you said?
At what's the number? $9.2 billion. So do the math. But I don't have it in front of me, but I can grab it real quickly.
Grab the price so we just know. And I just always interested in how much discount the risk arbs are putting on it there. But okay, so we get NOC here this morning buying Orbital, and NOC is just kind of trading. Well, you've had an odd lot go up there, but it really hasn't traded much. Trade 388 shares here. They haven't decided. It is bid up, so it looks like that they kind of like it. But what are your thoughts here?
I like 260. I don't know. I mean, the traditional move of the acquirer, getting hit. Man, you could throw that out the door with what happened with Gilead here. I just want to check that Gilead real quick, Dennis.
They wanted Gilead. It was kind of a different one to do because they wanted Gilead to buy some growth. They've been waiting the market, and they applauded it for it. And, I thought it was overdone. That's why I sold my Gilead. Where is it? I haven't even looked at it.
It did come down.
I can't buy it cheaper now. I sold Gilead like 83.5. So it's about $1 cheaper where I sold it. I went up to 85 and 86, and I was like, maybe I shouldn't have sold. But it's coming back in now and actually starting to look broken a bit too. You know what? We were talking about the IBB and saying, well, it's hanging up here and it's starting to look like it could break out. It still hasn't broke out.
Ooh.
It's almost hanging up here too long now. Like, you get to a certain point, like there's certain biotech shirts that look great. Celgene still looks like it's ready to go. But a breakout isn't a breakout until it actually breaks out. There's something you can write down there. So, people are always anticipating breakouts and sometimes get hurt anticipating it. A lot of times you got to wait for the actual breakout, before you start jumping in there, because sometimes they look like they're going to break out, they're itching to break out, and they just don't go. They don't maybe have the catalyst to kickstart them, whatever it is. But, here you are. Celgene has been hanging up here for 4, 5, 6 days. It looks like it's ready to go. Full disclosure, I'm long Celgene in my investment portfolio, but as a trade, I'm interested in this thing too, but it still hasn't broke out. IBB is the same story. It's just hanging up here between 330 and 336, and now it's kind of leaking a little bit. It is.
I like this one. I like this setup here.
You like it? So why do you like it?
It's just hitting at 330 3 times. Boom. This is going to be the 4th time if it gets down there. Where are we trading in the I don't know. It just looks like there's just so much between 320 and 330 that, who knows? You're going to get a little sector rotation. You're going to get money moving around a little bit. We've had a nice run. Oh, let's take some out of the biotechs and buy some of the dogs here. But it'd be the kind of setup. I'm going to move this to the top of my screen here. 330, and then, I wouldn't fall in love with it if it doesn't get 330, 329, 328, 327. I don't know, just a lot of air in there. We've seen these patterns before, just hanging out. So that's an interesting chart to me. Spencer, you got something?
134.50 is the price.
Ooh,
for OA.
That's not much.
Little bit, 2.5 bucks. It's typical. I mean, they usually put 1, 2, 3% on these cash deals, so that's typical. I would say go with the winner here, Joel, in the IBB. I think if this thing can go and fall below the 329.57, I know how hard it is to short stocks, but then you got some room to the downside. But if as long as it holds there, the breakout trade is still up. So I would say if it falls below that low, 329.57 is what I'm saying. I think there's room to the downside. And if it breaks out, makes a new high on the move, over the 330, say 337, because multiple highs at 336, and some breakout mode again. So it's kind of, still to be determined here which way this IBB wants to go. But when you look at the individual components here and you look at Celgene looks really good to me still. But then you look at Gilead, and Gilead kind of looks broken. So, to me, like, I think, you had a little pullback. Maybe it's just a pullback here. It's still an uptrend in place. But, just if you look from the last week and a half, that was an ugly candle there that we had on Thursday. And the candle on Friday wasn't, was an inside day. But I don't know. I'm torn here on the IBB. I think it's still to be determined whether it wants to go up or down.
Okay. I mean, keep an open mind here. Definitely breakout or breakdown. I think we'll see some movement in that this week instead of looking for it today. Sympathy plays with the OA spinner ESL stock. I'm not real familiar with that. That is
if you guys got sympathy stuff, sympathy plays here, because I was kind of thinking, trying to reach a little bit there too. I didn't really put a lot of work into it yet though, but spinners, he gives us some good calls sometimes. He's saying ESL can move with it. Hasn't moved at all this morning, so wanted to keep an eye on.
All right. Gap down. I'd say above 88 here. Hello. We could see 96. A lot of air in here. Not sure how closely those companies are related in the pre-market.
I wondered CAE in Canada too. It's one that's a small, you often think of these smaller companies in the aerospace that they could get scooped up. I own CAE already. I never like talking my buck on the show. I'm just not like that. But, in this case, I'll give you an idea. I've had CAE. I'm not, coming out here and, selling it.
Dennis, it's okay to talk about your book
for a decade. So, but CAE, I think, could potentially get a lift on this because it's a smaller player in the industry. And a lot of times you think about, the smaller players, like automatically people think, oh, well, you think like the big guns, what's in the industry, General Dynamics and Lockheed Martin and all those. But, those are the stocks that are going to do the acquiring. I like to think about who could get acquired. So, if there's anybody else to chat, let us know, or Twitter, let us know as well if you're listening on Twitter.
Okay.
Imbalance.
Yeah. Do we have anything in imbalance land?
Alibaba, 104,000 to buy. Alibaba gapped down on the close significantly there. So it's not surprising that it's getting a good lift here this morning. If you look at the BABA chart, it was 177.40, and then it gapped down another 70 cents on the close. That was just from option expiration. I actually got filled on some at 176.70, so I'm still long some Alibaba, which is nice. I actually took it overnight, hedged it with some AABA, and that's obviously Alibaba tracking stock, and it's working in my favor because Baba's up more than AABA this morning. But that was why it gapped down a little bit there. So it's got 104,000 to buy. I've got Bank America with 127,000 sell and bounce. But Bank America always flips around, and 127,000 isn't that much for a big stock like BAC. General Electric, 26,000 to sell. Twitter, 66,000 to sell. Square, which has been an absolute monster. We talked about it. I talked about Square liking it for a breakout. We got this one right there too. SQ is still in breakout mode here. The next hurdle will be 29 bucks. I'm going to go look at the book and just see if there's anything kicking around in the Square at 29. Yeah, there's 80,000 shares at 29. So that is a big, level for it. So that's going to be the next hurdle. If we can get up over there, then you start thinking about 30 in Square. Snap, 31,000 to buy. What's Snap? I haven't looked at that share for a couple of days. What's it doing? What's hanging out, Joel?
It's hanging out. Let's do that real quick. And we also got some stocks in the chat we're going to have to get after our first guest here. But Snap's holding 15, trying to clear 60. I'm still looking for, I know you call me crazy, Dennis. I still think this thing can do a 50% retracement, get to that $19 to $20 area. Spencer, what do we got here at 836?
Nate Tobik, he's the founder of a site Complete Bank Data. .com is a really good data, basically really good data, really good analysis for the entire financial sector. So we'll be right back with Nate Tobik.
Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick and Spencer Israel working the boards today. And we have Nate Tobik on the line. Nate is the investor and founder of CompleteBankData.com and also runs oddballstocks.com. Nate, how you doing on this Monday morning?
I'm doing great. It's almost summer here again in Pittsburgh, so it's
summer in Pittsburgh.
Nice,
it's summer in the Motor City too. Before we get to individual stocks here, and I was at a conference over the weekend talking about bank stocks and the relation for interest rates. So let's first just talk about your big banks. Every incremental increase in interest rates, how much does it really parlay into these big banks, and how does it parlay?
Right. So that's a great question. So right now the Fed has a target for interest rates of a little over 2% next year. And, as you know, they're at about 1.4. So if everything goes according to plan, we're going to see rates rise over the next year, maybe 0.5%, a little bit more. And so what this means is as people refinance their loans, as people get new loans, as people are borrowing as the economy grows, they're going to be borrowing at higher rates in theory. And because of that, a bank's going to have an incrementally higher profitability from these new loans compared to older loans at the lower rates. Now, what we've seen, which is interesting, is as rates have come up over the past year, loan rates have not come up. So if you look at, say, mortgage rates from 2 years ago is over 4.25%, 4.3% or so. And now you could get a 30-year mortgage for about 3.75%. So, it's down about 0.5% over the past 2 years, whereas rates have come up. So what this tells us is that the supply and demand isn't pushing on loans as much as it is actually deposits, which is you could see this through the numbers. And what we see in this is banks are fighting for customer deposits because they want to fuel this loan growth, and they're hoping optimistically that in the future these new loans are going to bring in a windfall of profits. But to get those deposits, they're paying higher and higher rates. And so if you go online and just look at any of these online banks, instantly your browser will be bombarded with marketing from other banks for CD offers. And the rates on CDs are climbing, and they're really close to what the Fed funds rate is in a lot of cases. So, a bank is loaning new money and they're paying more for deposits, and net interest spreads are actually coming down in some cases. And so to cope with this, bigger banks are closing branches. They're moving towards technological solutions, and they're trying to do anything to keep that spread even. Everyone is hoping that at some point in the future, when they'll be able to get higher rates on loans, but we just haven't seen that.
Very interesting point here about the big banks. And I saw a note here, since the financial crisis, that Bank of America has gotten rid of 1,600 branches. And that's a big departure from, the earlier in 2000s. They've closed a lot of these banks, but they're opening up in more in metropolitan areas here. Just real quick, before we get to some of your other picks, of the big banks, Bank of America, JP Morgan, where's your favorite one there? And I also want to ask you about Goldman Sachs here. Boy, this thing has been just such. I'm just looking at this technically. Long-term trading range, long-term base, really can't seem to break out. Am I being a fool by getting bullish Goldman Sachs here?
So I don't follow Goldman as closely as the other banks. What I would say on them is they're making their money on fees from trading and from assets, and that stream of fees has been coming down. And I don't think it's crazy to be bullish on them. They've always been able to be they're the savviest investor in the room at all times. They've always figured out a way to make the best of every trade. It looks like one of their former heads is possibly going to be the treasurer, head of the Fed coming up soon. We don't know, that's just rumors, but how could that play badly for them, right? At the same time, there is that macro force of these fee incomes are being squished. There's talk about tax reform, eliminating the 401k deduction along with the mortgage interest deduction. That's very bearish for some of these asset managers. I think Goldman's going to come out fine no matter what the situation is.
All right, let's move on to the recent hurricanes, and we've talked the last couple of weeks about money-making opportunities and in the markets. Now, Barron's comes out over the weekend, and they feel real good about a Texas bank, Cullen/Frost Bankers. That's symbol CFR, and I was looking at the chart on that. Looks like it's trying to break out over $90, but Nate, you got a different take on some of the Houston banks as a result of Hurricane Harvey. Why don't you share your thoughts with us?
Right. So I'm going to say investors should consider shorting Allegiance Bank shares, and that's ABTX. So this is about a $485 million bank, and all of their branches are in the Houston area. So right after the hurricane, they issued a press release saying all of our branches are open, and we had no flooding in our branches. They followed that up with another press release saying that some branches would be closed due to staffing shortages, which, if you can read between the lines, most employees work near where they live near where they work. So, there was flooding clearly in these areas around the branches. So even before Harvey, our software, Complete Bank Data, has a risk profile of banks. And these guys were rated yellow, which is an elevated sense of risk. So they have a lower capital. They have 9% tier 1 capital, which is they're hovering right around the minimum for being well capitalized. And, I've seen estimates, they say about 300,000 houses have been destroyed in the flooding. And of those, that 300,000 houses that don't have flood insurance. So those are going to be a total loss. And just looking at our model here, if Allegiance Bank shares, if they have 300 customers that have a total loss with a house value of between 200 and 250,000, they're going to fall between their regulatory minimum capital. And what that's going to mean is they're going to have to raise capital and dilute shareholders to get back to their minimum. So right now the bank is trading for $34. Book value is $22.65. If you look at the map, they have a branch map in their latest investor presentation. If you look at that map and then look at where the flooding was, they have a number of branches right by the reservoirs that were all overflowing. So they're going to take a significant hit from this. They're going to have to raise capital. This is going to be, so earnings come out in the next month or so for them. This is going to be a short-term trade. I think they're going to come out. They're going to say they need capital. They took a sustained hit. Also worked through, if they if their earnings took say a 15% hit from people just not making payments for a quarter, they would go from earning 40 cents a share to earning 4 cents a share. So, there's a lot of headwinds that they're facing. And I think it's going to drop like a rock once they say they need capital, once investors see the earnings hit. And I don't think they're out of business, but this is a way to make, it's a good short-term trade, I think.
Well, what about the street here? They've kind of picked it up, taking it from 32 to 34 during the crisis here. You think it's just kind of like that, feel good. It wasn't worse, that it wasn't worse, even though in Houston it was, worse than expected. So you got a little pop. Are you like a kid at a candy store when you see a stock that you want to short, adding a couple points during the week? Does that make you shy away from your decision, or does that just say come and just putting those offers out there? I will note this is not exactly a liquid stock, almost trade by appointment only here. Traded 15,000 on Thursday, got over 100,000 on Friday. So be careful with one if you're trading some size. But how do you take the streaks reaction?
Right. So two things on that. The first is another confounding variable is a director just sold shares.
Ooh, nice.
Like a couple days ago. But so I think with the street, Houston's now out of the news cycle. And so investors, the bank came out, they were smart. They had a press release saying, our branches are fine, nothing flooded, we're still in business. That was what they needed to do. And for most people who are just reading the headlines, they think this bank's fine, not a big deal. But if you look underneath that, their customers are not fine. And this is actually a perfect opportunity. So, I've been able to make a lot of money in the past between these gaps of reality and the news. And a lot of times It takes a while for the news to get digested into the stock price. And I think what we're looking at here is a situation where the price is going to be substantially lower in the next few weeks, but the market just hasn't latched onto that yet.
Nate, we've had you on for a couple of years, and I don't think I've ever heard you so convicted in a call here.
It's a good one. So there's times to buy banks, and over the last couple of years, it's been the time to buy banks. But now as things are heating up, there's not as many good deals, and there's actually a lot of cases where there's just severe overvaluation. And when the market starts to turn, it doesn't take much of a drop for the most levered banks or the most exposed banks to really take a hit. So this is one. Another one I would say is a good short is Bank of the Ozarks, OZRK.
Okay.
And so they've grown like a weed. Everyone loves the growth. They've grown in every hot market. So they're in Seattle, they're in New York. This is an Arkansas bank. This is kind of a sleepy small town lender that is doing the riskiest deals in New York and in Seattle. And now Amazon's looking to move some of their offices to somewhere else. Well,
yikes.
That's going to cool down Seattle. New York has already seen some of a cool down, and you don't need much of a cool down in some of this, in the deal flow, in the economy, and the guy who's out there making the marginal loan at the edge, which is Bank of the Ozarks. I think they're going to be the ones who took a hit. So there's a lot of factors that say that their loan book isn't great. Their chief lending officer resigned suddenly, and there's been no word about that. The CEO says everything's fine, we're doing great. Well, of course he's going to say that, but that's one I would keep my eye on as well. I would buy longer term puts on that and just wait that one out because there's a lot of momentum behind it, and but I think I think Allegiance Bank shares, we're going to see that's a shorter term trade. Bank of the Ozarks is a longer term short.
Hey, Nate, Dennis Dick here. Just wondered if you followed any of the Canadian banks, because we've got obviously some interest rates have been going up in Canada there, and they're projecting that they might continue to go up here for a little while. Some of these Canadian banks have done pretty well here. I mean, some of them held on, and now some are getting close back up to near the all-time highs. Your thoughts on any of the big Canadian banks like Royal Bank, RY, or TD, or Bank of Nova Scotia, Bank of Montreal? Any thoughts on those?
So I loosely follow those, and I was following the Home Capital, and I think what we've seen is so Toronto's real estate market is down dramatically. If you look at those numbers,
The last few months, yeah.
Yeah. And, that hasn't trickled through yet. I think the big banks are fairly well protected. It's the marginal lenders, like the Home Capital. They're way out there at the fringe doing the risky stuff.
Right.
But they got a boost from Buffett's investment. So, when he came in, everyone said, this is the all clear. I don't know if it was or if it wasn't, but I would not be in a second tier Canadian lender. The top tier Canadian lenders, I think they're a diverse. RBC is in the US. TD Bank has US presence. So the bigger banks, they're diversified. They're going to be able to take a hit, but the smaller ones, I'd stay away for sure.
Before we let you go, Nate, Dennis, you have follow up there?
No, I was going to say, and Nate was just talking about the real estate in Toronto in the last few months, and it has come down significantly because it was, just ridiculous. You can talk, Toronto pricing, I think in the last 5 years, they've over doubled. So, we've got a correction where they pulled back here pretty substantially. I believe in July, prices were down 6 or 7%. It was the biggest fall in 30 years in Toronto. So, it is, a concern there. And a lot of people talking about it in Canada. I'm Canadian, Nate, so that's where I always like to ask about, we have some Canadian listeners. But I think you make a good point that some of the, Canadian bigger ones are probably more diversified to protect themselves. But
all right.
Yep.
Real quickly, I just want to ask you, Florida banks, you see any weakness in any of the Florida banks as a result of the hurricanes?
No, I don't. And I would say I haven't done much work in the Florida banks, but I would buy Florida banks on a hurricane dip. Florida they expect hurricanes. The houses are built for hurricanes. We know people down in Florida, they said that screens were blown in, screen doors were blown in, and trees blew over, but otherwise everything is fine. And they expect that. So that's a case where when the news cycle, so I think there's a new one, Maria, coming.
Okay.
When the news cycle starts to talk about how bad it's going to be in Florida, you look at where it's going to hit. If it's not a category 4, category 5, and a bank starts to dip, that's a good time to buy, because that's just the fear in the market.
One more for you, Nate. SBNY Signature Bank took a big hit last week from 130, now under 120. Not sure what the news was. Any thoughts on SBNY?
No, I haven't followed them. So if someone's just interested in them, shoot me an email. I'll get you my thoughts.
And what's
later.
that email?
It is ntobik@completebankdata.com.
Great service from Nate Tobik, a bank expert. Thanks a lot, Nate. We'll talk to you again soon.
Thanks for having me, guys.
All right, S&P futures here, just hanging out mid-range on the day, Dennis. Nothing no real movement here during the show. Any changes in imbalances?
They're growing a bit. There's definitely some standouts. Like we said, Alibaba, 154,000 to buy. Twitter is 69,000 to sell. Bank of America's grown to 170,000 to sell. Duke Energy, don't talk about that one a lot. 54,000 to sell. DUK, that's significant for Duke. Square is growing. So the direction's staying the same for most of these, but they are growing in size. I see Lowe's, LOW, 64,000 to sell here. And remember to check your closes there on Friday, because there was a few little gaps. And sometimes what you're seeing, is a correction of those gaps sometimes on Monday. These ones I just listed off, I haven't checked myself yet, but that's one thing you always do after a big option expiration is check your intraday chart. Make sure there wasn't a move 20, 30 cents in one direction on the closing print, because a lot of times those moves retrace themselves. So there's tradable opportunities there, but if you get caught unaware of a move, like for instance, that BABA gap down 70 cents on the close, it's really, closed about 70 cents too low, because I always say order flow moves often get retraced, where like when you just got something just on a big order, it's just knocking a stock down because it's nothing to do with fundamentals whatsoever.
All right, quick comments here for Downward Dog here. He is looking for some long setups in Starbucks. I know there's been some positive ink in that one over the last couple weeks. I know, Dennis, you've been bearish since $5, but
the $5 coffee got me.
Yeah. This one, the setup, I don't mind here. I mean, if you're bullish, just saying think you put in a hard bottom here. Actually, that was a red dog reversal on 53. trying to break out over 55 here. I think the thing about this chart is, you're out under 53. Also, 65 to 53, 12-point move, 6 points at that. I mean, why couldn't you go, even if this is still in a bearish trend, 58, 59, 50% retracement there of the big break. Dennis, your thoughts on Starbucks?
It's just in a trading range here, and he already threw me under the bus here, so I don't want to give you my thoughts. Well, maybe I should give my thoughts because you should fade me on it. It's a stock I just don't get right.
Okay. And Dennis, how about ELLI? Ellie Mae.
We talked about this one on Friday too, ELLI, and I was just saying, it's got the rounding bottom. So two thought process. I'll just repeat, I believe, what I said on Thursday,
Okay.
because I remember talking about this chart. Stock had the big gap down. It's now had a long period of consolidation. Is rounding, so you could argue if this thing could get above those couple of highs that we just had a week and a half ago, I'd argue 86.30, 86.39. Get above 86.30, 86.50, it could be in breakout mode and have room to 90. And then, if it goes the other way and starts to break below 82.76, then you start thinking it's going to retest the lows. So long consolidation period. I kind of like the rounding of it right now. I'd like it a lot better if it got above 86.30.
I mean, I'm not sure what the news that took it down was, but
I think it was earnings.
It was earnings, and
I think goldfish memory here. It was a month and a half ago, but I think it was earnings. Spencer could probably verify that.
Just over 86 here. That's what I'd look at buying in on site. Spencer, you got why that went down?
I was going to say, what would it have been besides earnings? Looking at a month and a half ago, yes, it was earnings.
Okay. Yeah. And who else is pointing out? AJ Penn is talking about the hard resistance at 55. I see that too. In fact, just the last three highs there are 470.
On Starbucks.
Yeah, and Starbucks jumped around there. 472, 471, 479. So nice resistance here just at that $55 area. Dennis, the last thing I want to talk to you about is, the market's after a big expiration. And a lot of times we talk about, either a major turning point in the market or a continuation of the trend here. So I'm not going to, go all out here and say, oh, turning point here, we hit the all-time high, we're going back down. But there's big moves off these quad expirations as, the institutions get in and out of positions and read jockeys here. So I don't know. Just looking, I'm not going to try and make any bold call on the day.
I think you're making a great point here, though. It's a point that we haven't made on the show for a while. We do make this point, though. We have made this point before, is that sometimes your biggest moves are on the Mondays after an expiration, because the options, if you have a big strike with a lot of open interest, that can tend to hold the price back. Because again, just, the example I was talking about 40 minutes ago, if everybody's long, a certain strike price there, well, they can sell the stock against those calls and make money. So once those calls are off the board, all of a sudden the stock is allowed to open up. So that's, the mechanics behind it is that when you have a stock or even the market itself with a lot of open interest, you have a lot of options that just went off the board. And those options, I know a lot of people just trade the options, but like I said, the market makers are trading the stocks against the options. So the options open interest, when it's high at a certain price, and Nick Shaheen, who's going to be on tomorrow, talks about this a lot too, it can hold the price back, and you can get that pinning action that actually holds the stock down. Once Monday comes around, those stock options are gone, then it can get released. So that's why a lot of times you see big moves on a Monday after an expiration.
All right, 8:59. Spencer, you want to wrap up today's show and preview what's on Tuesday's docket?
Today's show flew by. I didn't realize it was not 9 o'clock
I was
already.
Because you didn't have to deal with Dennis for a whole hour. You only had to deal with both of us for an hour.
That's exactly what it was. You nailed it. So on tomorrow's show, got a couple guests on the docket. Nick Shaheen, of course, joins us every Tuesday. Also, we're going to be joined by Anne-Marie Band. She's an author and financial analyst. So she'll join us tomorrow as well. Don't forget, you can catch PreMarket Prep on our podcast on iTunes, SoundCloud, and on Stitcher by searching for PreMarket Prep, or by going to youtube.com/BenzingaTV, where you can watch the show as it aired live every day. So that is it for us today. Hope everyone has had a good weekend and has a good rest of your day. Don't forget about the Benzinga FinTech Summit, September 28th. So it is just around the corner in San Francisco. Go to bzsummit.com to learn more about attending that event with Kevin O'Leary and other big stars of finance. So 9 o'clock now. Have a good rest of your day, folks. We'll be back with you on Tuesday. you.